Look, am I bullish? We got oversold. People were expecting a really bad print. We finally got a print that was just bad. And we did get some average wages that weren't so bad. So it's a good relief rally. I see a lot of stocks that are going up because today's a day where the street's really defending a lot of tech. I think the street should be defending everything, meaning that there's much. I mean, I would defend banks because I think that they're not going to be so bad. I would defend a lot of the consumer packaged goods. I would defend the drugs. I just think that the problem with defending tech is that every time it runs, somebody now comes out and whacks it because tech is expensive.
Well, we're going to get to some of the downgrades today of HPE, right? Yes. And the sell on Cisco. Yes. Although we got Goldman up in CrowdStrike, which we'll get to.
Right. I mean, look, there's just endless bullishness on anything cyber because of Ukraine, Russia. But there were a lot of notes yesterday about PC weakness. And I think that caused a lot of the weakness. I know that Dell's been a big winner, big share taker over Hewlett-Packard. Year-over-year growth 6.9. Hewlett-Packard year-over-year growth minus 40. Whoa. A lot of that is Chromebook. Now, I would say that worldwide PC shipments declined 7.3% in the first quarter. And that was a lot of yesterday's weakness. And, it's undeniable, Carl, that there's a slowdown in tech. But people want to fight that. I think you should be pivoting, lower your tech weighting. If you're an individual, it's been a great run since 2017. I don't know, look for a stock that you like. Look for a Hormel if you want to. I mean, just look for something else besides tech. I get a lot of questions when we play Am I Diversified? And the average guy has 2 tech stocks out of 5. Make him one. Make him one. That's okay.
Well, back to CPI, though. I mean, in the coming months, the year-on-year compares are going to get a lot easier.
Yes.
Right? And the annual rate's going to ostensibly slow. Isn't that going to create the kind of environment for NASDAQ that we're seeing this morning?
Well, I would like to think that, but I would rather be in a drug stock or a bank stock, if only just because while interest rates may be better, this shutdown in China is just mind-numbing. And it's very hard to see people making their quarters when you can't leave your house, so you can't make the stuff. And I think that's, look, you got 2 problems here, right? You got the war, Ukraine, Russia, and then you have China lockdown. And when I watch Eunice, I mean, what kind of commerce do you have in China if you can't go anywhere? I mean, then I would say, well, hold Apple direct to consumer. Those guys can't go anywhere. So I think the China slowdown. Or as someone said to me this morning, Ben Stoto, why would I want to own Starbucks when you can't go to Starbucks? And the answer is, well, let it come in.
Yep. Citi today does cut Starbucks to neutral. They take their target from 120 down to 91. That said, some are arguing this morning that the action in oil is a reflection of the easing of the Shanghai lockdown.
Well, I happen to like oil. Again, I think oil is half of what it was in the S&P 10 years ago. So why not be looking at oil stocks? And when oil dipped yesterday, you got an opportunity. So I'm just saying, be more balanced is all I'm saying. I like a lot of tech as much as I have, but I just think that I also like others more, just because I don't want to come in here and see number cuts. And all the techs have, with the exception of cyber, are faced with the possibility of number cuts. Now, we have Andy Jassy on. What a great booking on Squawk. And look, he's not going to tell you how the numbers are, but he's going to tell you how he's fighting inflation. And I just think that, you know what, the freight is coming down, so maybe that can help them do spot freight. But I don't think he's going to wow us. We were getting wowed with tech. I don't think we get wowed. I think we get wowed with banks. I'm very intrigued by banks. I think we get wowed with drugs because you buy them when there's a slowdown in inflation. But I look at the bank stocks, and I'm watching them creep up.
Yep.
And I'm looking at tech stocks, and I think they're just recovering.